Okay, so here's a question. When you take profit, do you sell into stablecoins, cash, or Ethereum and Bitcoin? If ETH/BTC, then do you just dollar cost average in, or are you trying to find a good entry point? What's a good entry point into Ethereum? All right, good question. So, first, what's your answer to this?
Yeah, so there's kind of a couple questions there. So I think the first one was, when you sell, do you take profit into stable coins or US dollars? So um, me personally, I sell into stable coins. I'm still kind of exploring the concept that Ian has talked about in terms of taking a loan out against your crypto. There's also other DeFi applications such as Alchemix, where you can take out a loan and then earn yield to pay back that loan. So there's interesting opportunities within the DeFi ecosystem to leverage DeFi to not have to potentially pay taxes on your profits, or you're taking out a loan. It's not necessarily tax evasion; it's a legal way to not have to pay taxes. So I'm still exploring those ways of taking profits. But for me personally, I just move into stable coins. I'm very confident in DAI as holding its peg against the US dollars. And then the other question was, what's a good entry point into Ethereum? Depends on your time frame, right? If your time frame, if you believe in Ethereum and your time frame is 5+ years, looking back, $4,000 is probably a good entry point. If you're, worried that we're kind of in the middle of a bull market and Ethereum's gone from $2,000 to $4,000 in the last couple weeks, then it could be worth waiting for a dip. I don't have a chart pulled up right now, but 15, 20, 25, 30% dips are not uncommon in a bull market. In fact, it's usually pretty healthy for the price. So if you see Ethereum drop from $4,000 or 3,900, where it's at right now, down to 3,100, chances are that's probably a pretty good buying opportunity. And as I've mentioned before, that's not the time when you want to sell, when it's dipping.
All right, thank you, Forrest. Let's go to Bill. So, Bill, basically talk about your taking profit strategy.
Right. I think the taking profit strategy has been really covered by you. That, nobody would want to sell ETH, particularly since, institutions are just coming into the space. I think you would part with ETH to buy the best altcoins you can find that you think are really, really have compelling value propositions. I think when you sell, if you're selling, you should sell and be all the way out actually into dollars in your bank account, so you could sleep at night. Like, just say you're not a super wealthy individual. If you sold some ETH, put the money in your bank account, put some cash in a drawer, make sure you have 2 months rent covered, etc. Right? Now, I know that that's not exactly Lambo thinking, but I think if you cash out for a reason, so you can help yourself if there was ever something that went wrong. At the high net worth table, clearly ETH has become collateral, so you just borrow against it. 10% of the overall economy, like the loans against stocks in legacy, equal 10% of US GDP. So crypto is only discovering borrowing and lending versus big cap cryptos. In terms of a dip, everybody says I'm going to hodl. Everyone says I'm not price sensitive. I'm just going to buy it. And then it goes down and they either sell the dip, or when it comes back up, they break even and then it 5Xs. You know what I'm saying? So just be wary of, be aware of what kind of person you are. Are you price sensitive? Maybe your initial position should be smaller and hope you get that dip. I mean, if ETH is at 4K and you wait until it goes to 6K and then it corrects, you may still wind up paying 4K. Just you may wind up paying a better 4K in the sense that you're buying a purged market. Okay. The other idea, like I said, is to own ETH, just buy ETH and use it to borrow stable coins, which you can then lend out and earn 10%. Okay. Some of these yields are unbelievable in these like tether pools, etc. So cashing out has new meaning. Just don't forget the old meaning of having cash on hand and money in the bank in case of a problem.
All right. Thank you, Bill. Yeah. So actually, I want to go through a strategy I tested out. So I mentioned earlier that, or in past shows, that I was planning to take some profits on my Ethereum and crypto in general during this summer. So as a precursor to that, I basically just wanted to kind of go through and just try out these platforms prior to cashing out, right? So what I did this week, or last week rather, I used liquidity, right? So I talked about this. This is a project I'm very bullish on. Also have a deep dive video on Token Metrics TV. But what I did is, let me actually pull up my screen here. So I took basically about 50 grand worth of Ether and deposited this as collateral into liquidity. And then I used this to borrow about $22,000 here in their LUSD stablecoin. So what I'm doing is I still have my Ethereum. And why this is awesome, as you see in the video deep dive on TMTV, I'm basically not selling my Ether. I still have my Ether. I can come back here and have that upside to Ether whenever I want. But what I'm doing is I cashed out, or rather I put the collateral. They gave me LUSD stablecoin, which is now not creating a taxable event, because when you borrow money, it's different than paying capital gain taxes. Then I took this stablecoin and I went to Curve Finance. And if you go here at the bottom, there's LUSD, right? So I then swapped this for a different stablecoin. So I swapped this for DAI. And actually, I think they even gave me more money on this, right? So I put in, let's say, 22 grand. Actually, probably even less, right? So I swapped this. They gave me 21,000, basically 900. And then I take this and I went to Coinbase Pro, Gemini, and I cashed out, right? So you basically are using your Ethereum as collateral to get LUSD stablecoin. Then you exchange this on Curve. I chose Curve as opposed to Uniswap or 1inch exchange because Curve is better for stablecoins, right? It's basically a DEX for stablecoins, so you get a better rate here. The reason why I swapped to DAI, because if we go to CoinGecko, let's actually pull this up. LUSD is not really available on Coinbase yet. So whatever fiat on ramp you use or exit ramp, you want to swap to a stablecoin there that you can cash out in. So currently, this is only on DEXs, Uniswap and Curve. So you basically have to go through multiple steps. So for me, DAI had the most liquidity on Coinbase Pro, so that's what I use. But that's the strategy I'm using to cash out because I'm very bullish on Ethereum and I don't want to sell my Ethereum. So this is why I'm very bullish on this project. So that's my take profit strategy. Next time, I'm probably going to try out Alchemix. We've shared this with our customers via a code review. This is basically the same thing. They have their own stablecoin called ALUSD. The only difference, which is very, very interesting with this protocol, is when you deposit your collateral, they deposit that into herein finance. And you basically earn yield, and that yield is used to pay off your loan. So definitely great products to try out. I haven't yet used it yet, but I'll definitely use this next time I want to liquidate. Now, the main difference between this and liquidity, I believe for Alchemix, the collateral ratio has to be 200%. So basically, when I deposit 50 grand in this example, I would only be able to withdraw 25 grand. But with liquidity, the collateral is only 110%. Still not recommended, but if you wanted to be super risky, that's possible, right? So you basically, this is more capital efficient. Now, they recommend not going lower than 150%. Now, if you notice here, currently the collateral on the whole network is 285%. And my ratio is actually pretty high, it's 315%. So meaning that the price of Ethereum could basically tank, and I'm not really concerned that they would sell my Ethereum. Now, the other main difference between this and Alchemix will never sell your collateral. That's pretty positive because let's say the price of Ethereum tanks, or actually in this case, sorry, they only have stablecoins. So liquidity, you deposit your Ethereum. Alchemix right now, they only accept DAI. But in the future, I think with V2, you'll have the capability to add wrapped Bitcoin and Ethereum. Now, the reason why they don't sell your collateral is because they just use the yield for your collateral to pay it off. So with Alchemix, that's pretty positive. So basically, you can just deposit your collateral. If you're wrong, let's say you're margin trading or whatever, they'll just pay off your loan over time. So with Alchemix, it's basically just time. So that's the strategy I would use to cash out. Now, I'm comfortable talking about liquidity because I've actually used it. Alchemix, I'll go through and try this as well. But I think if you're looking to cash out without having to incur capital gains, especially if Joe Biden is going to do capital gains taxes, this is one effective way of doing it. So in terms of good entry points for Ethereum, I mean, I'm thinking long term. If Ethereum is going to flip Bitcoin, I think it's just penny pinching if you're trying to find entry points. Unless you're trading it, then I'll just use the trading indicator on Token Metrics. But if you're thinking long term, I mean, because I definitely regret penny pinching Helium, because I could have been a super whale on Helium, but I was penny pinching trying to buy the dip at 10 cents and 15 cents, but it went to 25 cents and never looked back, right? So sometimes it hurts to be greedy. But yeah, so tell me what you think. If you enjoyed that, definitely recommend you check out Moon Mission on Token Metrics TV. I'll be doing deep dives on projects like this. I'm probably going to do a deep dive maybe on an Alchemix next or some other project like that. Maybe even Armor Insurance, since lots of you are asking for more deep dives on that project. But yeah, tell me what you think.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.